Good morning. Welcome to supermoney.com. I meet both financial advisors and investment managers. Investment managers are what we call fund managers, and these are the people who manage your money. And when you meet fund managers, they keep talking a lot about asset allocation, why you should be in different asset classes, etc., etc. CIOs talk about it, CEOs talk about it, and they make it like it's almost kind of compulsory that you need to do risk profiling, asset allocation, etc. And the assumption is your financial advisor is capable of doing that, and therein lies the problem, right? First of all, the fund manager or the CIO, whom we call him, he is the person who should be doing fund management. He does not do investment management at the micro level. He does not know how much risk I should be taking, or rather how much risk the client should be taking, the investor should be taking. He does not know how much of asset allocation, which assets. He does not know the micro of the mind of the investor. So some investors are very happy with a huge exposure to real estate. Some are very happy with a huge exposure to equity. Both have worked for their families in the past, say 30 years or 40 years. So it is very difficult to break their mindset. But that is the job of the financial advisor. Investment management is different, and in financial advice is different. See, what has happened now is thanks to improving technology and falling prices, you've come to zero brokerage, right? So you have the accounts which are at zero brokerage. I'm not talking of how much risk is there, but there are companies which charge you zero brokerage. So if you are comfortable with that risk handling, then that is available. Then there is available at 1 paisa, 2 paisa, 5 paisa. At various price points, you have various brokers who will render all this service for you. Definitely, this is a great time to be a trader, because trading costs have dropped, trading technology has improved, and therefore but is it this truth for financial advice too? I have my doubt, because real good financial advice is dull, boring, and there is nothing to be done on a daily basis, on an hourly basis. If your hand itches, bad luck, you need to see a skin specialist, but there is nothing really in investing that you can do. But having said that, many people think a good advisor is one who will help them switch shares and switch asset classes. This is the time to be buying mid cap. This is the time to be buying gold, not large cap. Large cap's gone nowhere. This is the time to be putting money in the US markets, right? This is a guy who actually, there are a lot of financial advisors who create FOMO and come and tell you, I told you 3 years ago you have to put in US markets. You didn't see how much you have lost. So this guy now feels, oh my God, ek to I didn't put. Second, this guy is rubbing it in. I have no clue whether he has put, but yeah, he is rubbing it in. So what should I do? So first of all, understand, investment management is not a service which is available to the small investor, full stop. It is just not available. It's available only to the ultra HNI. This is about asset allocation. This is about expected returns. This is about the time horizons for which you're investing. So somebody sits with you and says, okay, this money is for 20 years, this money is for 25 years, and creates portfolios like this. He or she understands your risk tolerance. Believe me, it's very difficult. What you say is your risk tolerance is not what you mean is your risk tolerance. You are the problem, right? Whereas financial advice is we're making wise choice about how much of debt to hold, how much of debt to repay, how much of should you borrow at all for your daughter's education, right? How to save for your son's college education, right? And then making your will, making sure that everybody in the loop understands this. Do you understand the difference between investment management and financial advice? Most of us seek investment management and financial advice from the same poor guy, and he has no clue. So he or she has not come into this profession by choice. So they read up a couple of books here and there and enough websites, and they throw some jargon. If you have not heard any jargon, you're very impressed with this jargon and you say, yes, I must do asset allocation, I must have gold, I must do this. So, right, wrong, I'm not getting into it. For example, Warren Buffett does not have to worry that he has underperformed gold over the last 20 years. That happens now because of the date that you have chosen to do an analysis. Now, gold is a very good asset for uncertain times like COVID times, or there is a war in Kuwait or something like that, and gold prices shoot up. Every other fund manager can look like an idiot because of the sudden bull run in gold. But gold is not done too badly over a last, say, 20-30 years, provided you did an SIP. So was gold SIP available? Again, no. You have to buy 1 gram, 10 grams, whatever is your capacity on a monthly basis, and keep it in your locker. But gold ETF started, and now you have World Gold Fund, you have Sovereign Gold Bond Fund. So you have all those choices today, but those choices were not available, say, 40 years ago, right? You had to buy physical gold and hold it at home. So only now those kind of, for example, you can't buy 1 rupee worth of real estate. You cannot buy 10 rupees worth of real estate. So what is the point in trying to create a portfolio, which is, say, 25% real estate, 25% bonds, 25% equity, and 25% gold, right? You can create such a portfolio, but it is not so perfect because you can't move in and out of real estate for 25 rupees, whereas you can do it in all other asset classes, right? So what else is investment management? Means this guy comes, sits with you, explains to you all this, then he compares the performance of the portfolios which he recommended versus the portfolios which have done well. Then he tells you why to hold on, right? So this is the investment management function which an IFA claims he can do, but it is not possible for him to do. He is not well equipped, he is not well educated, he is not well trained to do this stuff. This is the kind of stuff which, I mean, very rare to find an IFA who can handle all this for you. However, your financial advisor can do something more sensible. He can take your portfolio and see how you are moving towards your journey. Ultimately, what is important is your journey, not what the world is doing. So if you have an advisor who can hold hands for you and take you through your asset allocation, your risk profiling, and make sure that you can sleep well at night and meet all your goals, what more do you want? What magic are you expecting? So that is the thing that he has to do. He is not a guy who can do all that investment management for you and create a process for you by how to invest, how to do asset allocation. He can't do it. Just stop fooling yourself that he can do it. He can't do it, but he can make sure that you understand that you need not do it, right? You need not look for the next winner. You need not look for the next Wipro, or as is fashionable today, for the next ITC, for whatever it means. I don't think it's a great performer, but anyway, more for humor's sake, or next HDFC Limited, right? So we don't know. We invest money in a good portfolio. We stick around, and we don't buy gold just because COVID crisis has caused a soaring of prices in gold. You may hold dollar, but then you may also feel, oh, dollar is being overprinted, so then you may hold a ruble. I mean, do whatever you want. But if you want asset allocation, you will have to do all those things. Do you expect your financial advisor to be able to advise you on all those things? Then it's a wrong expectation. Expect him to alter your behavior. Expect him to push you to write a will. Expect him to push you to communicate better with your own family about your goals, etc. Right? So making you do all that is far more important than sitting with you and doing your asset allocation and all. Of course, asset allocation is needed, but the jury is still out on how many schemes should you hold. Should you hold large cap, mid cap, small cap? Because remember, these classes and categories have been created by our great whimsical regulator. You may not need any of this stuff. You may just need one good multi-cap fund, or perhaps a fund with, say, 70% in equity and 30% in debt, right? You never know all these things. Now, anything can work. For example, wealth has been created for Mr. Azim Premji by Wipro, and for Mr. Mukesh Ambani by Reliance. right? So what works for you is something which you have to find. Mr. Azim Premji did not say, oh my God, let me sell all my Wipro and buy Reliance. That is where Mukesh has created wealth, right? It doesn't really matter. Find your own path. For some it could be through real estate, for some it could be through equity, and for some it could be because they did their own business. Some it could be because they are very talented, like a Sachin or a Kohli, right? So for each one of us, it's a separate journey. We have to do it ourselves. We have to also understand the difference between investment and asset management versus financial advice. Thank you.